It's the final trading day of the week. Let's get the breakdown of market activities. It's the Friday edition of Market Pulse here on News Central in partnership with Nairametrics. So welcome. I am Joanna Mustapha, your host for the day. Later on the show, we'll get into the $500 million denominated domestic bonds, which is set to be issued next month. The federal government is eyeing domestic dollar savings and that of the diaspora. Are you buying? The pool is already up at Nairametrics on Twitter, so perhaps you can head over there and vote ahead. But first, what a week it has been for the market, especially the NGX, mostly in the red. Let's get into the market today. Today was arguably the most eventful trading day of the year. The market took a massive hit with almost a 2% decline, 1.94 decline in the all-share index. Yes, we are below the 100,000 Naira mark, 100,000 mark right now with the all-share index, 98,201.49, down 1.94%, right? Apparently, the culprit here is the Dangote Cement. Dangote Cement apparently declined by 9.99%, almost 10%. And of course, we know that it's one of the 8 SWATs, one of the 8 stocks above a trillion Naira, right, market cap. So, you know, definitely activity there took a hit on the NGX. On the other hand, 30.8 million shares of Transco Power also exchanged hands as the company's earning results from 2024 half year were also released yesterday. So that's also driving activity on the market. Coming to the top gainers, Owando PLC was a top gainer, 10%. Again, FCMB as well. We know that they have also released their results, so market reacting. They're also a top gainer, gaining 8.22%. WAPIC and the likes on the top gainers list. Owando PLC, we know, as I said, top gainer, share price appreciated to hit its highest level in almost 10 years. We know that Owando has also been on a bullish run lately with some positives coming from, you know, their side as well. For example, the acquisition of Agip. So that's also driving investors' sentiments there, making it a top gainer. If we come to the top losers list, Eterna led with a 10% decline. But more interesting, right? And I mentioned this earlier, Dangote Cement posting 9.99% loss there. It's not on the list. Okay, yes, it is actually number 2 on the list. And you can see the volume there. It closed at 59.110K. So yes, the 9.99%, almost 10%. But of course, top on the losers list is Eterna. FCMB Group was a top traded stock when it comes to top movers with almost 495 million shares traded today. It was also part of the top gainers, we know, so it doubled top gainers. And it's the second time this is happening this week, I recall. Investors, of course, are reacting to the group's earning results from the first half of 2024. If we move now to the currency markets, right, the Naira has closed at the lowest level in 2 months yesterday. Dipping below the 1,600 level. However, midday trading data shows that the Naira is making a slow climb back. We'll see how far it gets with that climb. But joining me for the market breakdown after this break is Sam Tunji. He is a financial markets analyst with Nairametrics, so stay tuned for that conversation. All right, wait, I guess you're trying to unmute your mic there, but hopefully we have you join us in just a bit. Sam, are you there?
Yes, I am. Can you hear me?
Great, I can now. So obviously, looking at the rundown on the NGX, it's been a slow week on the NGX, and today we saw quite a lot of activity. You know, some also say today has been, this week has been quite one of the slowest, right, that I've covered. Some say attention have shifted this week to the fixed income side of trade because of the MPC. You know, others are also saying looming windfall tax has taken, you know, the shine of the banking stocks, right? What would you hold accountable for the drag on the capital markets this week?
Thank you very much. I will say that the drag is not recent. I think over the past few months, I think from around February, March, since the hike in interest rates, we have seen the markets being bearish at certain points. So yeah, it's true. In a high interest rate environment, you find more investors switching towards government securities. For instance, you find more investors going for treasury bills and government bonds and all. So the drag is kind of expected, but over time it will stabilize. And I wouldn't say it's something new, something that I've seen over time. And if you notice, there was a recent Treasury offer, I think that was on July 24th, and you find like a lot of investors going for the 1-year Treasury, think about 200 billion subscription or thereabouts. And the stop rate was over, I think, 22%. So you find hungry yield investors switching towards fixed income market because of the quick gains they can get in a high interest rate environment. So basically, the drag in the capital market is not new, it's not surprising, it's expected, but over time is expected to stabilize.
All right, we'll see. Hot money is definitely a point of attraction for quite some investors, right? Also, a number of company earning results have also trickled in this week. The likes of Unilever, FCMB, Transcorp Hotel, which posted a record 844% revenue growth for Q1. And I'm sure, there's some others to come. But so far, which earning results, have stood out for you? And are there any that you see inspiring and driving investors to spur activity in the coming week?
Okay, even though I would not like to recommend any brand as standing out particularly or saying, oh, go and invest in these shares or that, I think it has been quite an impressive report based on, in the context of the challenging business environment, which leads to higher cost of operations and the likes. If you look at the likes of Unilever, had about 63 billion revenue, which was I think an increase of about 41%. And you find their cost of sale to rising slightly, which it's a good thing based on how they have been able to manage their operations recently. I think there was a time that they reportedly had to shut down some segment of their business just to control costs and to adjust to the business environment. So while we are still looking forward to how other firms will perform based on their results, their half-year result, I think it has been an impressive ride so far, and we hope that the momentum will be sustained eventually.
Yeah, indeed, we do hope so. Let's turn to a story that you have covered closely, which is the issuing of the $500 million in domestic bonds expected to take place next month, as opposed to heading to the international markets for Eurobonds. What's your assessment of this as an alternative to raising debt? And is Nigeria poised and positioned to pull this off?
Well, I think it has been a long time coming. Sometime, I think early this year, the minister said, oh, it will be out around June. And June now, it will be out around August. So I want to believe that they have had enough consultation, sufficient plan in place to make sure that it works out. But there are still concerns around the implementation of this dollar-denominated domestic bond. If I can remember clearly, the IMF, the International Monetary Fund, said that there's a likelihood that it had pressure on the Naira. So we understand that the government is trying to get liquidity, FX liquidity. If you look at the FX market recently, these summer holiday vibes have been creating a lot of pressure on the Naira. And if you observe, the turnover has been declining steadily. So yes, Nigeria needs sufficient FX supply to boost the local currency, but we need to be careful at what cost will this come. So we are hoping that the government would have done enough consultation, work with relevant stakeholders to ensure that the implementation will not have a detrimental effect on the Naira eventually.
Yeah, and we'll speak more about this later on the show. And speaking about the pressures on the Naira in the currencies market, we're seeing further depreciation. Naira is currently has been at its lowest level since March 14, 2024. It's broken the 1,600 ceiling, and this happened just 3 days after the Naira posted impressive gains against the dollars. Do you have any concerns as regards volatility and Naira stability ahead?
Well, I think it was Fitch ratings that said some months ago that it's likely that the CBN does not have enough firepower to run a free float market. And in a sense, we are seeing this play out with the way the market, the FX market has been. You find the market being running from being the worst to the best, then somehow it's sliding back towards the worst era. And as we can see yesterday, after about 4 months, Naira finally closes at, I think, over 1.6 to $1. So it is anyway expected. The summer vibes, the pressure on the Naira is higher at this time. And I think the CBN also mentioned that in an earlier statement last week. And if we find that, yes, there's currently a lot of pressure in the markets, but what is the level of dollar supply in that market to meet up with this pressure? I think that's the thing that is missing currently at the, on the FX market. Last week, the CBN released a statement saying that they'll be supplying dollar regularly. I think they said on a weekly basis to the different segment of the FX market. So we're expecting them to supply at least cover up the gap for the official market and the black market from the Bureau de change end. So far this week, we have not received any announcement of any official supply from the CBN. But let's see how next week plays out. We are hoping that if there can be enough supply on the market, it will be able to stabilize the pressure the Naira is facing. So I feel as if maybe 1.6, maybe the peak before it starts to fall again and stabilize around probably 1.4. So let's see how the market goes.
We'll see how that goes. And some will say it's sad that we're at the point where the stability of Naira is now dependent on the CBN infusing dollar into the market. But it's been great having you on the show for your insights, right? Sam Tunji, financial analyst at Nairametrics. Always a pleasure to have you in. All right, up next, the federal government has revised its medium-term debt strategy and is set to begin the issuance of domestic bonds denominated in foreign currency, and they're targeting the over $30 billion in domiciliary accounts and diaspora funds. We're going to get more of this on up next, right, with David Olujinmi, financial markets analyst with Nairametrics. All right, you're tuned in to Market Pulse. Up next, Spotlight. So we're spotlighting the federal government. They have announced plans to issue $500 million in domestic foreign currency denominated bonds in 3 to 4 weeks' time. That's next month. Are you buying? Are you entering the market? Let us know. A poll is up already on X at Nairametrics. So the minister also added that depending on the success of the issue, right, the government has no plans of raising euro bonds from the international markets. David Olujinmi, financial markets analyst with Nairametrics, is with me now to discuss. David, great to have you in.
Be back in the studio.
Yes, back in the studio. Great to have you here with me. So domestic bonds, but denominated in foreign currency. How is this a deviation from what is the norm and typically obtainable here in Nigeria?
Yeah, it's a huge difference because what we see is a case of the federal government now deciding to say, okay, we're no longer going to have to go and issue bonds at 7-8% in the international market when we can raise the money here. They feel like we have diaspora. The government feels like, or the finance minister feels like, oh, we have people in the diaspora. We have a very huge diaspora population, and we have a number of industrialists and business people, and we have a lot of money in our domiciliary accounts, which can be used to raise these funds. So it's a turnaround from what is known. And if Nigeria can pull this off, I really see other African countries following in this footstep.
I mean, the government is finding a lot of creative ways to raise money these days.
Exactly.
But what do you make of this revision in strategy to raising debt? How is it beneficial to the economy?
So pulling in some of those funds, the idea behind this thing is the finance minister believes that we have a lot of money in our DOM accounts to pull this off, that people have a lot of dormant dollars to pull this off. So it's a way of channeling FX back into the economy. Nigeria is a country that's quite FX dependent. FX is one of the FX. Our currency devaluation is usually a very significant inflationary pain point for us. It's usually a very significant inflationary pain point. So having another way of pulling in funding or another way of pulling in financing for the government is definitely a welcome interest for all of us in the country.
Yeah, and we know that this has been something in the pipeline for a while. We had Sam refer to that. The Minister of Finance, he explained that, he explained the delay, saying that they were looking to establish confidence in their fiscal strategy and earn the trust of the citizens. Do we have the needed environment now to attract such funds into the Nigerian economy? Do we have that confidence in their strategy?
I don't want to be bearish. I don't want to be the bearer of bad news. I would just want to say that I feel like we can pull it off. But however, there's a lot of things at play in Nigeria. There's a lot of things that come into borrowings in Nigeria. We already know how much the government spends on debt service. Already know how much revenue the government is spending on debt servicing in every budget. This is a new bill. $500 million at our exchange rate is equivalent to about 750 billion Naira. Some people may say it's not a lot, but when you go on and if we can pull this off, this was how we started in 2013 when Nigeria pulled off Euro bonds. Then we went again, and now we've raised so much from that market. We've done so much treasury bills. We are now at a point where it seems like our debt, we now have to just keep paying back, and revenue is rising. So do we have the needed strategy to achieve this? I would say I hope so. I hope so.
Hope is not a strategy, they say. But these dollar-denominated bonds, we know that will be marketed to Nigerians in diaspora and perhaps those who have, savings in dorm accounts. I believe there was a report about $30 billion lying in dorm accounts. What would be the incentive for this demography, right, of investors, aside maybe love for country?
Probably returns.
Right.
So. This is a hypothetical situation where the Ministry of Finance, let's say the DMO is the issuing body, issues these bonds at 4% or 5%. I'm seeing them issue it at 5% because that's the best way they'll be able to. That's the most competitive rate that can actually compete with other foreign-denominated, other FX-denominated bonds that are in the international space.
Right.
We have the UST bills that are trading at about 4.5%. We have other countries. So apart from law for country, I say if the DMO issued these bonds at, let's say, 5%, we should see quite a remarkable interest from our diasporans and also from people in the country who have returns, because 5% on your dollar. 5% returns on, let's say you put in $100,000 and you get 5% return, that's 5,000 in the bag. So I feel like they shouldn't have much of a problem with that.
All right. Perhaps smooth sailing in that regard. But IMF, they have expressed concerns over the government's strategy to issue these domestic dollar-denominated bonds. They're saying that it could put more pressure on the Naira, elevate the costs associated with the Naira securities, and also fragment the market. How so? And are you with them on that?
So one thing I would like to say is this report just came out yesterday. I don't know how much information the IMF has to be able to give us this level of analysis and breakdown of how many things can go wrong. You get, there's always... It's been
in the works for a while.
Yeah, it's been in the works, but we don't have full details of how they plan to go about it. So I would not say I'm with them on it because obviously the world is a global financial ecosystem where everybody wants to really eat a pie from everybody's cake. If Nigeria issues Eurobonds, we are going to be issuing Eurobonds at least 8%. Now we want to have a system where we want to bypass that structure, want to bypass that system, and want to there's definitely going to be kickbacks from whoever it is that we could get kickbacks from. So right. I will not say I would not fully agree with them. However, I would also acknowledge the fact that some of their concerns are very valid, and me too, I have such concerns, especially on the Naira, the pressure that such level, this bond or this particular thing would have on the Naira, considering the fact that a lot of people are probably going to be putting pressure in trying to get dollars in order to enter into this, in order to get participate in this bond offering, bond issuance.
We'll see how this pans out. They're saying 3 to 4 weeks. That should be next month, and hopefully we get more information as things go along. But thank you so much, David, for the breakdown.
You're welcome.
Now it's over to you. Assuming you are the investor, do these dollar-denominated domestic bonds appeal to you? The Minister of Finance and Coordinating Minister of the Economy has said in the next 3 to 4 weeks, issuance will begin. $500 million in dollar-denominated securities. Are you in? Let us know at Nairametrics on X. Up next, we're heading to the African markets. And of course, it's a bit of a mixed performance on the African markets, some in the red. The JSE is up 0.46%. In Casablanca, Morocco, we're seeing their index up 99%. They have been steady in the green. And in Egypt, still running down. They are the bears apparently have the markets there. NSE, no surprises, down 85%. And Ghana Stock Exchange, interesting activity in Ghana, 2.19% in the green. So that's the African markets for you. Here, of course, it's still Market Pulse, and unfortunately, it is the final show for the week. So we're tying things together neatly at this point. That's the show for today and the week. The bears apparently had the week, especially on the NGX. Will the bulls fight back next week? We're going to have to wait and see. But don't hold your breath, right? Enjoy your weekend and make it a date with me on Monday and every weekday at 4 p.m. West African time for Market Pulse here on News Central in partnership with Nairametrics. I'm leaving you with the global markets.